So we've got some intelligence coming in from the field on builder anxiety. Okay, it's not universal, but it came out in a national call with our national team that builders were acting a little bit anxious, where they went from really nervous back in April and May when the real estate market froze up and who knew how long that was going to be before it thawed out, to almost an instant thaw. And then home builders reported their best months of home sales ever in June and July. So it's almost like we had the spring market and the summer market together in the summer, but they were raging. Like they sold all the houses all throughout the end of the year, many of these home building companies. But just now they're starting to report a slowdown in traffic in the sales models and just a sense of foreboding about how the sunny days may be, coming to an end. And what's interesting about that is you can't say, well, it wouldn't happen that fast, because everything this year happens that fast, right? The whole nature of this was that we had this outrageously fast, sharp market decline across all markets. And then we had an equally outrageous rebound from that in all markets. And so it stands to reason that the softening that comes after a recovery, you get a recession, it turns into a recovery, and then it softens up and gets into a more normal market. Now we got recession, recovery, normal market. Okay, so this kind of early indicator may mean nothing, but keep your eyes peeled. You may see some other reports coming out of other sectors of real estate indicating a little softening of demand compared to the last couple of months. So September 23rd, 1 to 4 p.m. Eastern time, we're going to have a Zoom event called the 360 SFR Investment Workshop. We're partnered up with a First American Exchange, which is the largest 1031 exchange company in America. If you don't know what that means, you need to tune into the event. And we're partnered with NewView, which is a leading self-directed IRA. People don't know you can use your IRA to invest in real estate. They're experts at that. And then, of course, Renters Warehouse will be there to talk about SFR investing, market analysis, property management, et cetera. So we've got Mark Fleming, the chief economist at First American, will be our keynote speaker. We're going to have a panel from those 3 different business sectors, talk about how they kind of coalesce to create really tax efficient and profitable investment plans. And then we're going to have breakout rooms. And this is what's cool. The breakout rooms allow you that if you don't want to ask your question in front of a large audience, you shoot over to the breakout room afterwards. It'll be a different Zoom room. And then you've got a smaller group, a little more intimate. You can sort of pick people's brains and ask your questions. So it should be great. Of course, it's free. So please sign up at the link around here somewhere, and we hope to see you there. So investors buying new homes is the biggest trend that I've seen in a very long time, okay? Build for rent is a label that really more means a builder or an investor building a subdivision intentionally for rentals, okay? Most of what we're engaged in is actually just new construction homes being bought by investors, right? It's a little bit different. It's a broader topic. We've got this whole national team out there talking to local builders. And so that's the power of what we've got here. The reason why Own America was acquired by Renters Warehouse, the reason why the diffusing of these 2 companies, technology and analysis and expertise, and then boots on the ground, local expertise is powerful, because we can deploy our agents. We literally said, go out and talk to builders, ask them these questions. They're bringing feedback back to us now, and we're lining up inventory in a new program called RW Select. RW Select is brand new homes for investors, big and small investors. By the time this video comes out, RW Select will be live. You can go to rwselect.com and see brand new, beautiful houses all around the country that you can buy. We'll manage them for you and rent them out for you. And you'll not get any phone calls about a leaky faucet or a hole in the roof or a broken air conditioner for potentially years, because the houses are brand new, they're under warranty, and it's fantastic. And you've got the local expertise of a Renters Warehouse advisor in the local market, helping you keep that place rented, performing, and managing it for you. So, and that's cool that your daughter's in the background, dude. I think it's great. So,
okay.
We're viewing SFR Pulse as an intelligence gathering operation. Okay, we've got people on the ground out in the field that we can give instructions to, and they'll follow the instructions. Like for example, right now they're out talking to builders, and they're inviting builders to be part of RW Select, our new construction investment program, right? But they're also getting feedback from builders, right? Like we learned that a lot of builders around the country were simultaneously seeing a slowdown in the inbound traffic compared to a couple of months ago. That's intelligence that we wouldn't have had if they weren't out there talking to these builders. And I dare say nobody has, because we're the only ones doing that. I can tell you that strategists who look at data all the time. There's a lot of people that are smothered in data. Okay, these are guys, they're Wall Street type analysts that work in these large funds that are they're trying to gather intel, and they love talking to people like us because they can get the anecdotal intel that makes sense of the data.
Mm-hmm.
That's the point. Data, I see people misanalyze data all the time. Here's my favorite. It came up again this week. My favorite misanalysis by very smart, well-trained data junkies is when they look at a neighborhood and they want to see what the rental market is in a local neighborhood, but there's no rentals. They can't find any comparable rentals. There's nothing for rent. Nothing has rented. They can't find anything. They conclude almost universally that there's no rental demand in that market. Incorrect conclusion. The conclusion is there's no rental supply in that market. If you deem a neighborhood has no rental demand, you don't buy a rental home in that neighborhood. But when you see no rentals, that's because nobody bought any rental homes in that neighborhood. Right. What you're seeing is a place that you want to buy. If single family homes rent in this area for $1,500, but you're the only one in this neighborhood, and that neighborhood is good, can you get $1,650? Well, if you're the only one, you can, right? So lack of supply, lack of evidence of a market usually means lack of supply, not lack of demand. And if you create some supply, the demand will gobble it up because there's always demand to rent houses.
So Charlie Lewis, 31, asked, in your early career as an investor, did you stay away from SFRs and target condos because of the lack of maintenance? Or did you just see condos as a safer long-term play?
Great question. And I'm sure he's relating to the fact that we talk a lot about this concept of have a kid buy a condo, which was a chapter in a book that I wrote 10 years ago about compartmentalizing an investment with a very important goal, right? Life goal. I think we have a kid in the background, so you're probably thinking about have a kid buy a condo yourself right now. I bought a condo for my daughter's college fund. She happened to have gone to her freshman year of college 2 weeks ago. The investment matured while the child matured. The reason why I went with the condo is that my hands were full, literally. And I'm not good at maintenance. I don't like those kind of details. How the heck I ended up in a property management company, I'll never know. But actually, it's because property management companies enable people to own property without getting their hands dirty. I chose to buy a condo to accomplish that goal 18 years ago. If I had to do it all over again, I'd buy a single family rental instead of a condo because the single family homes in that neighborhood appreciated more than the condo did in the last 18 years. So it would have been a better investment. So live and learn.
That makes sense.